Hey guys, what is up? Hope your weekend is going well. Just wanted to catch up on the markets real quick. So what I have up on your screen here, top left-hand corner is crude oil futures. Top right-hand corner is the dollar index. Bottom left-hand corner is TLT, the 20-year Treasury ETF, and bottom right-hand corner S&P 500. So let's go clockwise. So as we talked about, I don't know, a week and a half ago or something like that, we saw crude oil make this downward trend, and we talked about it being a downward triangle. So after we talked about it, I think it was probably down here, right around the 13th or something like that. It did come up, and in fact on Thursday, I was thinking to myself, this may very well go back down, and a downward going triangle points downward, may break out to the downside. So we're looking at something like this, possibly. Even in the larger trend here, you can see it's also lower highs, so also a downward trend. So we're looking at a possible breakout downward. And on Friday, it sort of came to fruition. I probably should have taken a position on Thursday afternoon, but I didn't. I was looking at other things on that day. Okay, next is the dollar index. Here we are in a trading range, still in this trading range. Haven't really moved much at all. So that's not giving us too much, but important to watch nonetheless. Here is the bottom left-hand corner is the TLT, and right here is where the Fed made their decision not to raise rates on Wednesday. So bonds went up, and again, we're at a period of resistance here as well, similar to crude oil. So you can see this line right here that was the previous lows for really several months. So that's going to be tough to break out of. So this is another one which may be going down, which is interesting because if rates increase on their own, that's the opposite of what's been going on in the world, right? So in Germany, in Japan, rates are negative. So you'd think that would push our bond prices up as well because more people would want our bonds because they're paying more. But it looks like that may be turning around. And then last but not least, the S&P 500. So here we are also where the Fed made their decision not to raise rates before the election and here in September. So we probably won't get a rate rise at least until December. So what happened was the markets went up and then they gapped up here. So you can see there's a gap right here. So this was almost an island gap. Usually those are island tops and island bottoms. But we ended up refilling this gap right here on Friday, so pointing downward. And I think part of the problem is we went to right about this level again, the 2175-ish level. Let's see what it was. We got all the way up to 2180 and then came back down and closed at 2177. So, 2175 was sort of a resistance that went through for the last couple of months, resistance support here. It was resistance, turned into support, and then we popped below that, and it may be acting as resistance again. So, we're right here at the 50-day. This is the 50-day moving average. This red line is the previous new highs of 2134, which provided a bunch of support right here. So the question is, if now we're hitting the 50-day and we made a lower low like this, which may be pointing downward, and if we go back down again, I'd probably be looking at the 2100 level again, if not all the way down to the 200-day moving average, which is at 2060 on the S&P. So that's what we're looking at. If we don't pop back up above the 50-day, I'd be looking for a pullback. And it's the right time of year for it. It's late September, early October. Um, it's very possible to have a decent sized pullback. And then it looks like for the rest of the year, as long as the pullback, if we pull back, as long as it's not too severe, it looks like we'll be rallying into the end of the year and very likely through 2017. But if we have a really huge pullback, like in 1987, we hit all-time highs in August as well, and then by October we were down by a third, like 33% or something like that. I think the S&P went from 330 to 220, I believe, something like that. Look it up. It's a fact. I don't think that we're in the same type of market that we were back then, and I'm not calling for that kind of a decline. But if it does happen, that may change things. Of course, even in 1987, once that drop happened, we resumed our upward trend after that. So anyway, take it for what it's worth. Like I said, the next 4 weeks or so should be interesting, and then hopefully it's smooth sailing to the end of the year. But we'll see. All right, everyone, have a great rest of your weekend. I'll talk to you later. Bye-bye.